Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHUI ON Land interim report. SHUI on Land Limited offers a diverse range of businesses and services, including property development and sales, leasing offices and commercial/mall properties, property management, services, construction services, interior fitting out, renovation, and maintenance services for building premises, debt financing, and management services. The significant increase in SHUI on Land's stock price by 37.5% over the past year can be attributed to several key factors. The company's resilience in a challenging macroeconomic landscape was demonstrated through its sustained profitability and strong financial management, including a stable balance sheet and successful debt repayment. Additionally, the expansion of its asset-light strategy and joint ventures contributed positively to its growth prospects. The company's performance in Shanghai's premium market, where high-end transactions increased significantly, also boosted its contracted sales. Furthermore, SHUI on Land received global recognition for its sustainability efforts, being named to the CDP 2024 Climate Change A-list. These positive developments and announcements from the company likely reassured investors and contributed to the increase in its stock price. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. 1. High occupancy rates at Xinjiang retail properties and increase in footfall and sales. 2. Strong demand for luxury units in Shanghai, bolstered by rising land prices and high-net-worth buyers. 3. Robust growth in Shanghai's registered population and strategic industries. 4. Increased contracted sales, total locked-in sales, and recurrent rental income from commercial properties. Revenue decline drivers. 1. Decrease in property sales volume and value due to government policies and weak consumer confidence. 2. Continued oversupply and weak demand suppressing rents in China's office market. 3. Downturn in China's housing market and decline in property investment. 4. Volatile external and domestic business conditions, leading to cautious tenants and slowdown in leasing activity. These drivers highlight the key factors influencing revenue growth or decline, with a focus on Shanghai's luxury real estate market and its connection to broader economic trends. Net income and profit margins overview. The company's financial performance shows stability in net income and a slight improvement in profit margins. Despite no explicit change mentioned in net income, the overall trend suggests consistency. The gross profit margin increased by 1% to 66%, indicating a positive shift due to resilient commercial property performance and effective capital management strategy. This stability is attributed to the company's prudent approach to managing its resources, allowing it to maintain profitability amidst market fluctuations. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash generated from operating activities of RMB 170 million in 2025, the company is successfully producing positive operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations, providing a solid foundation for future growth and development. The company's debt level and interest expenses have undergone significant changes. While the net debt declined by 9% to RMB 20.2 billion, the total debt increased to RMB 25,761 million. On the other hand, interest expenses have decreased substantially, with finance costs down by 17%, interest expenses reduced by 25%, and interest paid decreasing from RMB 176 million in 2024 to RMB 805 million in 2025. The company's financial performance varied across different regions and segments. The top-tier cities in China, particularly Shanghai, performed well due to their large portfolio and mature office market with stable occupancy. Property investment also generated significant revenue of 965 million. On the other hand, Wuhan, Chongqing, and Foshan struggled, while the office market in commercial properties faced challenges due to economic uncertainty and oversupply. Additionally, the construction segment incurred a loss of $1 million. Management is optimistic about the company's outlook, citing opportunities in new office properties in Shanghai. They plan to build on their core strengths and proven track record while pursuing growth in top-tier cities through partnerships and joint ventures. The company aims to create a unique living experience with its Xinjiang community concept. A prudent approach to capital management is also emphasized, prioritizing healthy cash flow and sustainable development that meets ESG reporting requirements. The company has a history of paying dividends to its shareholders. In 2024, it paid out a significant amount of 423 million RMB in dividend payments. This is further confirmed by the explicit statement on page 46 that reads paid, yes, under the dividends section. That concludes the financial summary for SHUI ON Land. Feel free to comment below, and I will be happy to answer them when possible.